I think that's certainly true. China's made clear their plans to increase natural gas usage, decrease nuclear, decrease coal over time to improve their environment. Certainly, U.S. natural gas is in their long-range plans. I think the temporary problems that we're having right now are more about trade disputes and the negotiating process.
So is anything going to change in that relationship, or will we, if it comes to it, could we see some tariffs that are going to disrupt some of the production here in the U.S.?
Not clear. Probably not disrupt production in the U.S. We're hitting all-time highs, 80 BCF a day of natural gas production, still importing 5 BCF a day from Canada. We have a very, very aggressive growth program going across the United States for domestic use of natural gas. We have a significant increase in exports to Mexico. Our LNG across the entire globe is starting to increase now at the pace that we hoped for several years ago. When you add all that together, it's a global market. Gas is fungible. We have a huge competitive advantage in the U.S. with lower feedstock prices. If we lose a market one place, we're simply going to move it somewhere else. I think U.S. is very competitive.
Robert, I was really struck by the increase in U.S. crude imports into China, less than 2.5 million barrels at the beginning of 2017 to 15 million barrels last month. We saw China back away from threats to apply tariffs to crude and instead apply it to the refined product. What happens with LNG products in terms of expanding that market if the threat is constantly there of adding in tariffs?
Well, Contessa, the fundamental supply-demand balance is the same for crude as it is for gas. We just hit recent highs in oil production, over 11 million barrels a day. We still import a lot of crude into the U.S. to some refineries. Our exports are now at about 1.5 to 2 million barrels a day. Only a small portion of that's going to China. If they shut off crude exports or imports from the U.S. today, probably would not have a big impact on U.S. domestic production.
If we're not potentially shipping as much LNG or crude to China, where else is it going? India, Europe, somewhere else?
Yes to all the above. Europe, for sure. We've got great strategic trading partners there. There's a bigger spread or arbitrage, if you will, whether it's NGL products like propane, butane, or LNG, or actually crude to a certain extent. They still use that for European refineries.
But let's face it, China is not just another market. It potentially is a huge market. I mean, when you talk about if we don't have a market in China, we can send it somewhere else. But that somewhere else is not going to be nearly with the potential that China has for you guys, I would think.
I think the biggest concern with China is that these tariffs might increase the cost of fuel products to the Chinese consumer, slow down economic growth in China. That's a problem for the entire global and U.S. Energy complex. I think we all look to China for long-term economic growth and therefore the increasing need for fossil fuels. I think it would be problematic if we saw an economic recession caused by this trade war. But I think the practical short-term impact is we'll figure out a way with U.S. production to find someplace else to sell the product.
I want to get your thoughts on the impact of the other tariffs, meaning the steel tariffs and what those have done to prices here in the U.S. because you're a midstream company. I'm assuming you're using a lot of steel and a lot of these other metals as you build out your infrastructure.
We are, and we've seen some price increases. That's undeniable. I think for most of the projects that have been built out over the last couple of years, those materials were purchased long ago before the increases started. With new projects, particularly those coming out of the Permian Basin right now, to connect the growing supply in the Permian to the Gulf Coast markets, there's no doubt those projects cost more, probably on the order of 10 to 12% more for steel. And to a certain extent, when it's specialized metals, it's even higher than that.
We're still seeing gridlock and congestion in terms of being able to get that crude out of the Permian right now. It's been a huge issue.
It has, and it'll be an issue for probably another year or two, but it's not unlike every other shale play that's developed very quickly. The supply comes up, the economics support that. Pipeline companies make plans for big projects. It takes a while to buy the right-of-way, to get the permits. There are regulatory challenges. We build it out. The basis differential goes down, build out the pipeline, it comes back up, and the market balances again. That's the way the industry works.
Whole different world from when the wildcatters were busy in those days.
It's manufacturing, Bill.
Yeah,
it's manufacturing.
Exactly.